What is up, everyone? It's time for another episode of the Let's Talk Stocks show. This time you're going to go a little different. Generally, we're on live every day. Now, I didn't come on live yesterday. I was very tired, but I'm on here today, and generally we're live every day, Monday through Friday. We're going to talk about stocks and what's going on, and just, hey, what do you want to talk about, man? Put it in the comments, tweet it out, whatever, and I'll get in. We can talk about your stocks. I generally tell you like what I'm doing, what I believe the market's going, where I believe it's doing, things like that. Then I get off and we do it again the next day. But today we're going to talk about one of my favorite trades, how I make doubles all the time, and it's not, it's real, okay? But it's not like I'm making doubles within a week, a day trade or a month. These are year-long trades I like to put on using options, okay? So I'm gonna go ahead and show you a similar trade, all right? I'm letting out the secret sauce right here, and all you need is patience, and you just put on a lot of them, and yay, and you can double your money. You can catch doubles all the time. So we're gonna show a trade on Microsoft, and I just picked a stock because generally when you pick a stock, because we're gonna basically buy leaps. We're gonna buy vertical leaps, okay? Leap verticals or vertical leaps. Yeah, we're gonna buy leaps and make vertical call spreads on them. So you want to buy stocks that are going up, okay? It's very important. How do you know when a stock is going up? Because it's going from the lower left to the upper right. It's really that simple. And I got a stock like Microsoft up here just so you can see that. You can see it goes up, and the trade that I put on, it would work every single year. Every single year except for 2008 for the most part. So that's very important. That is very key. I'm telling you, you have to buy stocks that's going up. Okay, sideways won't work. Down, of course, don't work. Stocks going up like this. Now, will I do it on a stock like Microsoft? Probably not. I feel that this stock has ran just a little too much, man. Look at this. And we're gonna go ahead, before I show you, we're just gonna go ahead and I'm gonna tell you why I wouldn't necessarily do it on this stock. So this stock is just up for demonstration. I like the chart that goes up, but I just think it's too steep. So let's just pull up Facebook real quick. I want to pull up stocks that's just like Microsoft. Stocks that just run, and you can see here, same chart, right? It's kind of stuck, even though that chart does look good. Apple, let's pull it up, right? It's kind of stuck. It's still going up. This is a good stock, but it's stuck. It's not going to the moon. It's not a hockey stick like Microsoft was. Google, right? It's stuck. It's not a hockey stick, even though this one actually looks pretty good too. It looks like it's basing, but these are all generally stocks that are going up. Let's do Salesforce, right? Salesforce.com, and see, it's kind of stuck, right? It's consolidating when I say stuck, but if we pull up Microsoft again, look, it's straight up. It's just, why is Microsoft going straight up and all the other stocks are stuck? So is this stock going to get stuck? Start going sideways. That's why I'm not sure if I would do I can't even speak, the particular trade I'm going to show you on Microsoft. But we're going to do it on Microsoft for demonstration purposes only. Okay, so there it is, Microsoft, and we're going to talk about trading options. So when we go to the option chain, you got all these options. Look at I'm using Thinkorswim, by the way. Noisy people outside. Okay, so generally, this is a little advanced, okay? So hopefully you know what I'm talking about when we're talking options, and maybe I can do something where, I can talk a little basics, okay? But we keep it a little advanced. I'm not going to show you what an option does in a buy and a call. Don't you hate videos like that? You go to somebody's channel, you want to learn something, and they go into the basics. Now we going right to the nitty gritty. All right, so here we are. Here's the option chain, and in parentheses is the days when the option is going to expire. You like say this one right here, 16 August, 65 days, and it's going to expire. Now, how many days in a year? 365. So we're going to play around that era. Okay, we're looking for something like 365 or better. So we're going to pick this June right here, 373, just over a year. Looks like about a year and a week. Right? And let's pull up the chain. Let's see what it's got to offer. So here's what makes the trade really good, because we're going to put on, let's go back to the chart. All right. Let me zoom it in like that. When I put these trades on, you basically have to say to yourself, we sitting here, Microsoft is at 131.13 right now. So we're going to look into the future. Okay. We're going to say, hey, come mid-June, will Microsoft be higher than it is today? Because that's the trade that we're going to put on. And this is very important. Okay, this is why we have to trade stocks that are going up, because if it goes sideways, it might not work. It's not going to work out. It still could work, but it's against you. So we know it goes up. It's been going up every year. So basically we're saying, hey, come June, that was the option we was looking at, right? The June 2020. Is this stock come June 2020 going to be higher than it is today? You answer that question, and then we can put on the trade. So you say, yeah, I think it is. I think it is. Okay, so let's put on the trade. All right, so basically, we're going to buy a vertical. We're going to buy just in the money vertical. Okay, so I'm going to buy this 125, and I'm going to sell the 130. Okay, so I got the 125 and I sold the 130. It's costing me $2.80 out of $5. That's the mid price. Okay, so basically it's gonna cost us $280 because these options are times 100. 500 minus 280. That means we can make 220. Okay, so we're gonna go to the Analyze tab so I can show you. All right, so let's go ahead and bring this to the Analyze. We're gonna analyze it. Okay, so the blue line, the turquoise line, is the line that when June 20th comes, that's where our profit will be. And if you look over my, can you see the, there we go. If you look over my head, you could see the numbers. So the purple line is where the prices are today, right? The turquoise line is where prices will be June 20th, 2020. All right, so you can see 20th, 6/20/20, right? So June 20th, 2020. If it's over here, anywhere, we're going to lose 280. This is the most we can lose, which is the price that we put on, right? And if it's over 130, we're going to be up 20. We're going to be up 20. Goodness gracious. We're going to be up. This is hard because it's 6/20/20, and we're going to be up $220. It's kind of weird. All right, so come June 20th, if it's over 130, okay, it's already over 130. It's 131. But if it stays here and goes higher by a whole year, we're going to make $220 on the trade. Now, that's not quite doubling your money, but it almost is. It's damn near close. So it's, let's just call it doubling your money. Right? You put 280. Imagine you give somebody 280, give a bank 280, put 280 in the bank, and a year later you're getting another 220. So 280 plus 220 equals $500. Okay, say, hey, I'm gonna give you 280. Come back in a year, give you $500. Everybody's doing that, right? Say, hey, I'm doing that. It's great. Goddamn right. So this is if you could double your money all the time, you don't have to day trade. You don't have to, man, you just do trades like this. Wait a year, you got time, market go up, down, and you're chilling. As long as nothing crazy happens where we just go into a prolonged bear market like the year 2020, you're going to be all right. So here we go. So we're looking at the trade, and let's look at the turquoise line. Okay, so here, right here, where my cursor is, that's anything that's 130. All right, remember, here's this dash line. That's where the stock is today. If it just stays here, it could even go down $1. You're going to double your money in a year, okay? And just let it go up and blah, blah, blah. And as time goes on, this trade is slowly going to be making money. Okay, you can see the theta as of right now. This is the decay on that. It's positive theta. So you're going to make $3 a day, basically. That's great, $3 a day. But it's not linear, okay? As you get closer to that date in June 2020, as you get closer to that date, the theta will expand and you'll even be making more, especially if the stock rises. So, it's really that simple. You could put this trade on for 280 and get out of it, 2020 for $5 even. There's going to be a little slippage in there when you try to sell it. you know. But that's the trades. I do these trades all the time on stocks that are going up. Okay, I'm always buying leaps and I'm doing verticals in the money verticals, meaning the stock's already past it. I just need it to stay right here. It could stay right here and do nothing, and I'm gonna double my money. It's that simple, right? So that's great. I mean, double your money. Let's say you make 100%. We'll call it 9. Let's see what it actually is. Let's see if my math is gonna work. Okay, so how do I do this? I could make 220. Is it 220 divided by 280? That is that 78%? Or I always get confused. Or is it 280 divided by 220? Yeah, it's 220 divided by 280. So basically, it's a 78% trade. Okay, so 78% divided by 12. Basically, you're making 6% on your money a month. Same trade. 6.5, so call it 7, 7-ish. And you don't have to look at the computer every day. You don't have to look at the market. All you do is, you check Microsoft out. Hey, what's Microsoft doing? That's 135. You're good, man. You're good. It's not, as long as something crazy happens, right? So that's how I do it, and come back a year later, you're making money. You make it. I mean, you put these trades on. That's 280. I just did that one time. Okay, so I put 280, 280 on to make 220. Well, you know what? How about I do it? Do it 5 times. Same trade. Oh shoot, didn't go over here. 5 times. So that cost me $1,400. I put a $1,400 on. Come back a year later, made $1,100. Okay, 1,400. It's 24. I made $2,500. Right? Here's $1,400 today. I'll see you in June for $2,500. And it works all the time. I wouldn't say it works all the time because you guys go out there and start just doing this. Basically, the probabilities on this trade is saying you got a 63% chance. And I'm looking at the delta. I should say 57 because this is the short strike. We needed to close above 130. So it says 50%. You got a 57% chance of you being right. Now, what pushes that to be better than 57% chance? And that's this chart. That's why you have to buy it when stocks are going higher up. You want to be able to go like that and just draw that line because, sitting over here, here's 130 price right there. I'm close. Oh, shoot. Oh, look at that. Yeah, I'm close. So basically come here, that stock should be somewhere about 145. And when it is, you just doubled your money. Well, you made 78%. So that's what I do. You can put a lot of these on stocks that's going up. Let's look at and all kinds of. You could diversify this. Pepsi. Let's look at Pepsi. Pepsi's down hard today, but the stock, look at it's going up, right? It's a stock that's going up. Coke, same kind of stock. So it's going up. It's lower left to upper right, but you see, look at this one. You see this pattern? I mean, this thing, you could bet your mortgage on this. This thing is so perfect. Up, down, up, down, up, down, up, down, up. Guess what? It's going to be going down. It probably started today. Look at the thing. Well, it's actually up 27 cents. But let's wait. You want to wait. Wait until it gets over here. It's been doing it for the last 7 years. So why wouldn't it do it now? So this one, you want to wait. You want to wait for that little extended pullback, get right back into it. And you can put that trade on. I'm just pulling up random stocks. Pfizer, it's going up. It's consolidating a little bit. But this is actually, it looks like it works. This is actually perfect. Basically saying Pfizer will stay 43 or, at level 43 for over a year. I mean, that looks good. Right. Oh, man, that's perfect. That's like a little flag. Oh, man, I like this trade on Pfizer for doing something like that. So, you say, hey, man, 43. So let's do it. Let's do it on Pfizer, man. Let's go down to here to June. And it could be longer, but it's going to take longer for you to double your money. By the way, it can also be shorter. You could do this in a 30-day option. You'll double your money as long as it stays higher than 30 days. But here's the thing, man, volatility. Okay, the stock can easily go down in the next 30 days. I mean, like, hey, Trump comes out and says, oh man, tariffs, boom, it's down. It's down hard, and you just lost all your money, because that's when it doesn't work out, you could lose all your money. All right, it's either all or nothing here, unless it closes between the two, the option that we buy and option that we sell. There's a little gap, but if it goes lower than that option that we bought, you just lost all your money. Okay, so we don't want that to happen. We will actually get out of the trade if we won't just watch it lose all our money. Okay, so if this thing is like, oh man, it's getting like May, I don't know, February, March, and depending on we're out of there. You know what I mean? So you just got to watch it. And even we're not even going to let it go to the full expiration either, man. All right, this thing gets about 70%, man. Just buy it back and put it on again. Roll it out to another year. Just keep doing this for a year, and you find yourself you be making money. So all right, here we go. Pfizer. We're gonna do it on Pfizer. We say, hey man, I bet you Pfizer is gonna stay right here, $43. It ain't $43. By next year, this thing is gonna be higher than 43, or where it is at 43 and higher. Okay, so we got the 40 option, the 42, and the 45. So we're going to buy the vertical. It's going to be any money. We're going to buy the 40 and the 42. It's going to cost us $125. Okay, so basically, it's going to cost us $125 to make 75 cents. So 75 divided by 125. This one is not quite doubling, but it's 60%. And that's because we're in the money. Basically, Pfizer's at $43. We're going to make 60% on our money if it's above $42, all right? So let's go ahead and analyze it. Bring it into the Analyze tab, and you can see, here we go again. So most week loses 125, and if this thing is below this line, see where it starts to go down? If it's below 42, come June 20th, we're going to be losing money. But actually, the break even is right here. That's the red line, and that's about 41.25. So it could actually go that low before we start losing money. Okay, but we lost it all if it goes below 40. If it stays above 42, right? If it stays there, goes higher, and it already is higher, it's at 43, we're gonna make 60% of our money. All right, it's that simple. And you could draw this line. Like I said, read this betting right here, man. This stock will be higher. It will be higher than it is today over the next year. You know, a good return in the stock market, if you invest in the S&P 500, 7-8%, right? You think, all right, I'm doing pretty good. I'm doing good. 7-8%, 12%. What is it? I think it averages 12% over the last 70, 80 years or something like that. But 7% over the last 10, something like that. You're going to have to look up those numbers. So anyway, here it is. 60%. This one is a 60% trade. Pfizer, pretty solid company. 60%. Did I just have a trade pop off? Facebook denies report that Mark Zuckerberg knew of privacy issues before Cambridge scandal. So they're saying he kind of knew, but they're denying it. Okay. Anyway, Facebook, man, these stocks is just a political, this is why you never know. This is why you want to buy stocks that's going up, because even if it starts to go sideways or consolidates and some government stuff comes out, you still got time. And this is why we want to do it over a year. You have time. You have time for all of that Facebook. Yeah. If you had this stock, if you had this trade on Facebook, you could chill, man. Just lay back, just watch it. As it go down, put on another trade. Hey, it got low, I'm gonna do it again. So anyway, look, Pfizer. So we're saying 43, man, 43. If it stays right here, over the next year, you're gonna make 60%. Oh, that's what I was getting at. I'm sorry, I'm all over the place. This is live. You could contribute. You got any questions, put it in the chat box. This is live, all right? So I'm not reading a script like anybody else. I'm going right off the top of the dome, because it's easy. It's that easy. Look how fast I was finding trades like this. Even in a market like this, you can't actually go, don't look at what's going on. Just look at stocks that's going up. okay? Not up hard where it's going to be a huge correction. Just stocks that are going up, okay? Nice 45-degree angle. It's really that simple. I know it's like crazy. And it's going higher. And generally stocks that don't do it on liquid stocks, okay? And I suggest anything in the S&P 500, nothing liquid, because if you need to get out, you'll be too much slippage there. So basically, yeah. So let's say a good percent, 12% you made on the S&P. Oh, you invested in the market, you made 12%. This is 60%. Imagine it just does half good, right? Or you get out half the year, 6 months. You make 30%. 30% on your money. Do you know how fast you can double, triple, become, if you compound this, just keep doing it and doing it, that you could be a millionaire pretty fast. Probably within 10, 12 years. It won't be that long. As long as it's consistent, you got to stick with it. There's going to be losers. Yeah, you're going to pick losers doing this. So you have to diversify. Yep. So this is the secret sauce, man. This is the secret sauce. So anyway, if you look at the stock, it would have worked I'm looking at every year here. It depends on when you would have put it on. Like, let's say if you put it on right here, a year later. Yeah, it looks like, let's see if you put it on here. Yeah. You might have struggled right here in July 2015 because of these dips that it was taking. But when you see a stock like Pfizer and you see it dipping right there this is not the 50-day moving at. This is the 50-day, since this is the monthly chart, the 50-month moving average. You see it touch that line, it's touching that line, it hangs out there, it doesn't go low. Perfect time to put on a trade like this. So anyway, that's it. I'm going to keep it simple and short. That's what I do. Just find stock. It's really, really, really that simple. It's not technical. So you don't have to be pulling up all kinds of stochastics and all kinds of, what do they call those indicators? Studies. Look at all these studies. Yeah, you don't need to pull up all of these studies, okay? You don't need that. No, you don't need that. You just need to look for stocks from the lower left to the upper right. Boom, that's it. Steady, okay? Steady. Let's let's pull up some more stocks. Disney. And here's a stock. I like it now, but it wouldn't have really worked. Disney was going sideways for 4 years. So this wouldn't have worked. Over here it would have. See, it's going up, 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 up. And let's say you put it on right here. Nope, it came back down. You would have lost your money. And not all of it, because you would get out before. And this is why you have to be careful not to do it when it's going high, right? So you look at it like this, you'd be like, oh yeah, that's the perfect stock, man. This is Dre said, just buy stocks that are going up. So remember I said Microsoft, right? Which I don't recommend Microsoft. This is what happens to those stocks. They don't go up forever. So you don't want nothing overextended, because in that year, the correction could come. And look, this thing went sideways for 4 years, but look at that multi-year breakout. That's why I have lines already on this chart. Disney is a total buy, especially if it can come down at the breakout point, 120. Oh man, you need to back it up. Get in that, all in that. That's right, because that's a beautiful breakout. It's beautiful. I missed it. And I was in it. I caught a little bit. I think I remember catching. I was in Disney hard. I was paid all these years. Not this kind of trade, other trades. All these years. Because sometimes, by the way, I'll buy, if I believe in a stock like Disney, I'll just go up, buy the 2-year leap call. Boom, call it a day. That's it. Maybe sell some short-term 30-day options against it. Way out of the money, just to kind of nibble at some of that premium, get it back. And that's what I do. So I like this. I'll show you this one too. So I like Disney, right? So I'll just go out here, go to the leaps. And here, look at a nice 2-year leap. This 18 June 21. This thing is going to be illiquid and expensive. Look, people traded it today. This looks like a call spread. This guy right here is doing what I do. He bought the 135 and sold the 140. And it's like, you know what? I just need Disney to go over 140 over the next 2 years. And he's going to basically double his money. That's more than a double because he's asking it to go up. Let me see. Vertical. Well, not quite. If he can catch it, not quite. It's the mid is $2.58, so $258. You know, so he gets the other 240. Now it's 260. So it's almost double. It's almost right there. And it's telling you, look, it's telling you 58% chance. The deltas, it's very close to the probability of the option being successful for the most part. So there's a 58% chance this thing is going to expire in the money. That means it's worth. That means it's going to be worth money because you're going to buy that, right? So basically, okay. So yeah, I was telling you about the long option, but see this volume here, that 10. Somebody did that trade right there. I guarantee it. And maybe they even went along a call, right? 11:10. Anyway, so I'll come in here and maybe buy this right here, this 81 delta, this 105 call for 30. Yeah, that's a big spread right there. I'll try to get it for, let's say, somewhere in the mid 37, right? 3,700. So let's say I bought it for 3,700. 3,700. And let's analyze it, okay? Let's check it out. Let's analyze this trade, this long call. And here it is, man. It's showing me, get rid of that there, a delta of 80, right? So basically, for every dollar it goes up, I'm going to make $80, The theta, which it's ticking away. Basically this option, it's in the money, but it's some of that premium it has in there. It's decaying. There's still time decay on these long leaps. It's minimal. It's under $1 a day, but but it could be worth it. This is a 2-year leap, okay? And so if you think this stock is going to move over the next couple of years, I do things like this. Right, and like I said, to mitigate that premium decay, I'll sell some calls against it. All right, so basically, say it goes up to 140, right? It goes up to 140. And, the purple line is today. You're up $403. It's almost like you're long the stock, and you just long the stock, right? So to get rid of some of that premium, I'll come up here. Let's say I'll come to the 30-day, and let's say the 37-day. Come over here and sell something way out of the money. I mean, remember, you got this thing for 2 years. Let's go ahead and sell this 145, right? Sell it. Sell it for $50, right? And then that's 1 month. We could do this every month, and every month I'm getting $50, so I could sell it deeper, but it's all right. I just want to get a little bit of money. So it says a delta of 14, meaning it's a 14% chance of this thing not expiring worthless, basically. And that's exactly what we wanted to do. We want it to expire worthless if you do something like that. So anyway, yeah, that's what I do for stocks like this, and instead of, if you were to buy this outright, 100 shares of Disney, it's going to cost you $13,600. So I basically got long with that $3,900 or $3,700 leap, right? But it was only worth about 80 shares. So basically, if we take 136.04 times 80, basically we're replicating $10,883, kind of $10,800 worth of action. Okay, so if you were to put $10,800 and say, give me 800 shares of Disney, that leap will do the same exact thing as that. So that's what I do. Look long term. Okay, leaps are great. They don't decay. You don't have to worry about going up and down, because if it were to go down, you'll lose money. But not really, because there's a lot of time. There's 2 years left. So you lose money, but you got time. You got time to recover, man. This thing can go down to 115. You got 2 years for it to get back over 135, at least on that other trade. So leaps just allow you to think. Allows you to think. What we got up in here? Says I got a message for Alan. Great group to join. Are you spamming my feed? Anyway, somebody came in and your comment went right to spam. So yeah, said a great group to join is Facebook. Okay, I don't really do the Facebook group things, man. That's another thing. I don't like to get brainwashed, or I don't want other people messing with me. Okay, I don't want your trade idea. I know it seems no. You have to do this on your own. People have agendas. Okay, the only way to get away from them agendas is don't talk to nobody. Think of these ideas yourself. I told you it's pretty simple to do. It's simple. Find stocks that are going up. Okay, you got 2 years. You don't got to worry about catching the bottom. We just need it to go up. Stocks that go up continue to go up. Okay, and this is why you want to diversify. You don't want to put all your eggs in one basket, because some of them may go down. Like if you would have bought Disney right here in mid 2015, you would have went down. You'd be like, oh, 2016 you lost. So you don't want to put all your eggs in one basket. So that's what you want to do. That's the trade. Right now the Dow's down $65 points. Yeah. So anyway, there's the trade, man. Look at this breakout. It's beautiful. Look at the volume increase on a breakout. This is a multi-year breakout like this. Beautiful. I didn't get back in Disney yet, but I am eyeing it. Yeah, you see I got lines drawn all over this thing. Just looking at it. Just looking at it. But I'll probably put a similar trade like I was showing you on this Disney. I just didn't decide what kind of trade I want to do yet. So I showed you the long leap action, right? Simulates buying stock, and that one I double your money. Now let's say let me show you that single leap, right? And let's go to the analyze tab, and we're going to do it on Disney. So we paid $3,700 for this, right? So to double our money, $3,700 times 2, we need it'll say it right here, basically $7,400. We need to buy it back. We need to sell it at $7,400, and we double our money. So here we are. We bought that for $3,700, and we need the stock to go up, 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 right here, okay? Right there. We basically need Disney to go to $178. Okay, that's even off the chart. We need Disney to go to $178 to catch a double. Right? It's crazy. That's steep. Okay, to catch a double, doing that leap, $178. If you were to buy 100 shares of Disney, if you had the $13,000, where are we at now? 135. You would need it to go to $270. Did I do that right? Is that a way to catch a double? Yeah, because you got more money. You need to get 13,700, whatever. I guess I just doubled the price, right? That's crazy. You want to double your money and bet that, hey, I bet you it stays here over the next year. You get the same double. That's why it's so powerful, what I just showed you. Look, I gave it to you free. You got it. Boom. There, take it. Try it. Try it on a stock. Try it on a small stock. Put a small position on. And the thing is, you got to be patient. What's up, Cashmatic? Not spam, just trying to help. Okay, Alan, I appreciate it, man. I'll check it out because I still got it right here. Facebook.com/ it's not showing me. Yeah, I just clicked on it. Oh, shoot. I just went to it right now on my other major market moves. So are you the, is that your group or are you just a member? I think you hit me up on the one of my feed before and you put that in there. What What was that I just came in on? Okay, I'm showing everybody how to double A money, like the trades that I do. So you'll actually have to watch this from the beginning on the replay. And we're just buying leaps. We're buying verticals on the leaps, okay? In the money leaps. And yeah, you're going to have to kind of catch up on the, it's very interesting. I decided today I'm not going to necessarily talk about the market. Dow's down 62. We're just going to kind of talk about some knowledge. This is my first video talking about how I trade, like exactly what I do. And it's something that nobody talks about, but it's the easiest thing to do because everybody wants to be, oh, you got to trade. Oh, buy, sell, buy. Oh, sell. Oh, look at the stock to grab. Man, forget all that. You put the trade on. It's like a set it and forget it. Set it and forget it. Just wait. Be patient. And it works. And you're talking about end of the year. You're like, yeah, my portfolio's up 70%. You seen the Cashmatic. You see my numbers. Yeah, it's up 70%, up 80. How'd you do that? You trade? Nah, not really. You know what I mean? You just buying and you waiting. Okay, you're just waiting for it to happen. And, you know, you can put sells on it. So like if you're expecting say 80%, you know, you can sell it for 50%, make 50%, sell it, get out, and then take that money and put it out again for another year. Get some safety behind you. That's what I do. You know, so now you got another year. You got time. If it were to go down, you got 2 years. It'll come back up. It always has. It went back up all the time, except for in 2000. 2000. It's the only time it didn't come back up. Here we are, 2019. Oh, so let's bring up the SPX. Let's see how far I can go back on this thing. Here we are, 2000. You can see over here. I think you could see it over my head. I don't think I'm in a way. And it went all the way down to 2002. Man, that was a 2-year drop. This strategy would not have worked then. Okay, but if you look at this drop right here from 2007 to 2008 and almost back. So no, it might not have worked there. If you would have put this trade on at any time in 2007, except for mid 2007, I mean, I should say 2008, I'm sorry, it wouldn't have worked. Okay, it was just too steep of a drop. I mean, this is a one-off. I mean, this market was down 60%. Right in a year. That was crazy. So you almost got to say this is a one-off. It just doesn't happen like that all the time. Now, from 2009, you put this trade on any time in the last 10 years, you've been catching all kinds of doubles, all kinds. Yep. Even in these little downturns, look how fast it came back each and every time. Boom, boom, boom. Even got them highlighted. You know, I did the video the other day, and today is just a pullback or a start of something. I think to eliminate the news, I think it's just a small pullback. And I was just looking at this chart. If I look at the news and I see what's going on, I think, oh shit, we're going down. But if I eliminate it, I think we're going higher. And that's what I kind of need to do. Look at the drops, man. I got them boxed, and I did this for a reason, you know. It's hit this, you know, here, this 50 moving average here. It's like clockwork. Here, 1, 2, 3, 4, 5. Here, 1, 2, 3, 4. Here, and then it goes another 4 years higher. Look, if you look, just think of everything going on. We're just 2% off the high. I mean, that's crazy. I mean, what's the VIX? The Dow is down 63, and the VIX is down. It's only down a penny, but it's not up. It's still relatively kind of high, 16. But we're down 62 points, and the VIX is down. It seems like it should be up a buck, 50 cents or something like that. So looking at the monthly, and this is why you want to use long-term charts. I don't like dailies for the most part. Maybe it's the time of entry. You know, I like weeklies. Weeklies and monthlies will give you the big picture. You can see what's going on without all that craziness and just do what I did. I got all the the dips in grade. Look at it. It looks the same. It looks like it's so patterned. So what happens now? I mean, it works until it don't work. And right now it's working. And it's been working for the last 10 years. So here we go. I mean, so it looks like it's going higher. You know, I'm going to be all in. If this stock market reaches all-time highs, I'm getting them all back in. I know it seems crazy. Oh, I missed the pullback. But no, I got to get in. Yeah, so that's what I think, Cashmatic. I think we're going high. I don't think this is a pullback. I think we had it. You know, it's just a little kind of shaking out. But like I said, if I think about the media and what's going on, everything that's going on, this G20 meeting and Deutsche Bank, you know, all this stuff, I'm like, oh, shoot, we're going lower. You know, so, yeah, let me clear these drawings. Yeah, it just looks like, I mean, this last candle doesn't look the greatest. I mean, like I said, it could go down from here because it works until it don't work. Okay, so if we were to break, and I'm going to say that low, that December 24th low, man, we're going a lot lower. Look at all that. Look at that gap. Right? I mean, all the way, you know, in there. We got to fill that. So hopefully we don't break that. You know, do we come back halfway? Maybe. But, I mean, we're 2% off the highs. I'm just like drawing lines. You know, we're just about there. Yeah, that last monthly candle, not the greatest. And this month just started, but it's shaping up to be not the greatest. Let's pull up the weekly. Let me look at the weekly. The weekly candle looks decent. Looks real good. Let's see what happens. Stochastic is crossing over, turning bullish. So I like it. Yeah, I like it a lot, man. I'm hoping it to go down a little bit. I want to get in. I'm hoping it to go down, you know, on my long positions. I'm hoping it to go down another 2% or so I can jump in. I want to get in. I think we had a low. Yeah, so that's what's up, man. Cashmatic, I just wanted to change it up a little bit. Double D, if you come in later, watch the replay, it'll change up. Kind of show you some of the trades that I do, how I do it, and see what you think about it. Play with it. Now, I demonstrated Microsoft, but I don't recommend Microsoft. I just really think Microsoft is toppy, man. Microsoft is scary looking, and I love that stock, man. I was making a bunch of money on Microsoft when it was at 100 to 110. I was selling covered calls, and each one was like $150 for a week. I was selling weekly 7-day covered calls and doing like 6 of them, right? And each week collected $600. It's like damn near all, you know, just boom, boom, boom. Let me see, 150. Yeah, I would do it enough to where it was $600 in premium and collect that $600, and the stock was just kind of doing nothing. I was just constantly making damn near $600 a week, you know, so that worked until it didn't work anymore. And then I got out of the trade right up in this area, right up in here. No, what is this? This is 2019. Yeah, right up in here, in this area. Because when it started going down, I'm like, and then in here, I think I was doing it. And then it went down. I didn't know what was getting ready to happen. And that was but when it went down to 94, I was like, wow. I mean, because it was hard. It was high when I was doing it. The high was like 115, and I watched that thing go to 94, and I'm like, man, what the hell? Microsoft is solid, you know. But everything was going down, and I should have really got back in. That I totally missed, you know, when I was basically in love with the stock. This is not in love with it, but this is the stock that I just knew. I loved Microsoft. I knew how it traded. And when it got down to 93, I'm just like, nah, what the hell? You know, I was really confused, you know, thinking 2008. I think that's in the back of all our heads. And that was the buy point. I was scared, you know, should have been in everything. Should have sold the house and put the mortgage on it. Refinance the house. Throw it on Microsoft. It sounds crazy, but if you would have did it, you would have made a lot of money. So 41%, man, up 40% in 4 months. I mean, these stocks like that. I think Microsoft's $1 trillion stock now. That is a crazy move. That is crazy. Disney had a similar move, and that's what makes me think, I don't know about this Microsoft. Watch when I do this. I'm gonna do something like, well, maybe, I'm not sure if it'll show. Nah, let's do I'm gonna show you how steep this thing is. Let's make the time 200. Meaning, I'm squishing everything in. And look how that thing is. Let's clear all the drawings. It's just going straight up. Straight up. I mean, that's crazy. Look at all the years it was flat. And then just straight up. No. Can't sustain. It's too much. So that's why I was like, I just did Microsoft as a demo. I don't think it continues like that. It may for another year, another bar. I don't know. I just don't. And so I put up stocks that are like it, like Amazon. See, I'm gonna do it again. I did this. See how it had its pullback. See how it was spiked right there, and then boom, it had a hard pullback. Right? Facebook. Do it again. This is a good perspective. Facebook. Well, this one just didn't been traded that long, but you could see it didn't do it. And the other one's Apple. Look at that. See? Just it's not a Microsoft, not straight up. By the way, this one looks concerning. I'm looking at these drops and see how it goes up, drop. It's perfect timing, really steep right here. Another drop, that's okay. It's been doing that, but look, it did not reach the high. That is concerning. Okay, so it did it every time. It dropped, new high, drop, new high, drop. Nope, didn't make it. It's concerning. That's very concerning, and it's coming down. Yeah, so I don't like that. That trade I showed you, I would not do it on Apple. So Netflix. You see Netflix was doing the same thing as Microsoft, and then boom, right? Same here. Look at that. Every single time it got a new high. It did not make a new high right here. So Netflix looks like a long time short. Maybe it's Disney. It's the opposite of Disney, right? That's concerning. It fell short. Oh man, what's those other high flyers? I did CRM. We're doing it again. Better perspective. That one's kind of stalling. Let me see. Facebook, Netflix, Amazon, Google. I did Google. And look, see, Google's not as steep. It's been stalling. And Google so far is still safe because you see, on this pullback, it did make a new high. Pullback. Now as it goes up, let's see. Hopefully it does make a new high. It did not fall short like we seen what happened with Apple. It just had a common double top right there. And it pulled back. If it stops here, that will actually be great because it didn't make a lower low. And hopefully it can move on to new highs. It's 1166. If it can get higher than this candle, I think I'll be interested. I'm interested in it now. Let's see if it can break that candle. The last, that's this month's candle. But let's see if it could get up in that range. That's 1166. And then maybe we have something. We had some momentum to bring it back up to those new highs. I know they was talking about the antitrust with Google and breaking it up. You're hearing it, hey, man, if they break up Google, it'll be a good thing. It'll be worth more than it is now because the properties that Google have, they're so undervalued. But if you break it up, they're going to be valued right. And the cash that they have a lot of cash. So it could be a good thing. Google's only down $1 today. Look at the advanced decline line. Oh, okay, it's doing better. Let's go back to the minute. I just thought it was. Look at that. It's all over the place today. I mean, it's not even trending. It's just it's starting to trend up. But what it tells me, the market, nobody knows what they want to do. Nobody knows. Look at that, man. That's crazy. It's crazy. Well, here's the zero line. So ain't nothing really advancing in a positive way until it gets above there. Yeah, so that's it, man. Let me know how you like those trades that we did. I keep it simple, and that's really all you need. I mean, that's all you need. You're not trading every day. It's patience. You don't have to sit here and collect $50, $100. Just do it long term. Buy stocks that are going up, right? That is so key. And not overextended like Microsoft. It's overextended. I think you could do that same trade on Microsoft short term. Remember, I told you it works short term. You could do 30. You could do that for a weekly option. But you better be right, man. Stocks is all over. So pushing it out a year. You like, if I asked you, we'll use Amazon. We'll use Amazon, for instance. Let's see where it's trading at. Let's pull up the, let me pull up the weekly. And it's at 1857. If I asked you, hey, is Amazon going to be above 1857 by next Friday? You're going to be like, I don't know. I'm like, you want to put some money on it? Hell no. You ain't going to do it. You don't know. It's volatile. You're like, If I say, hey, is Amazon going to be higher than 1857 by next June in over a year? You're probably going to be like, yeah. Oh, yeah. They doing big things over there. Hell yeah. And put the money on it and wait. And all I got to do is stay here right now, and be higher and double your money. That's what I do. So Amazon is a good stock. But just like that other one, this is concerning that it didn't make it didn't make the new high. It didn't get it fell short. If it double topped, you'd be like, okay. When things double top, they come down and then they go back up. They go through it. It didn't make that. It didn't do it. So I like it. It's concerning. It's it could still do it, but it's just concerning. We wanted to see, just like it did here, it just go to new all-time highs here and go up. I really like this consolidation when it did that. I called that on this channel. Oh man, you could have made a lot of money. I made some, but not as much as I could make. This was beautiful. Okay, to bounce off the bottom in that consolidation, look for months. And then when it finally blew out of there, wow. That's up 15%, 253 points. Just imagine buying an option on that, just one. Unbelievable. Yeah. These are my favorite trades. If you see that, oh man, that's a volatility squeeze. All right, so cash mat today. Hey babes, I got my babes up in here. That's Life Like I. I'm gonna go ahead and end it. Where are we at minute wise? I can't see, but I know we're pushing a little long in the tooth. All right, so that's it, man. Put your comments below. Tell me what your favorite trade is. Tell me how you like the trades that I showed you. They're very patient trades, but they work. Okay. Like I said, you put them. You don't have to put them all today and wait a year. You could put some, just slowly put them on as you see. Just keep rolling out of them and going to the next year. I can get more in detail later on. as I learn how to talk, you know, because this is my first time getting on here, and I do it live. Like I said, this is live, you know. Yeah, just let me know what's going on, man. How you trading? Making out in this pullback. Dow's down 42. It's making a comeback. Today's trades, I put on an Amazon calendar, right? I'm experimenting with calendars and butterflies and wide range or iron condors, wide strike iron condors, right? Maybe like 20 points wide, and that's been and sticking to the SPX. So I do these trades that I showed you, but I'm just kind of chilling out on them. I got some on Amazon, matter of fact, and like I said, I'm looking at this and I'm going, I don't like that pullback, but I want to, yeah, I don't like the volatility that's going on, and yeah, I want to see some solid ground because I don't know if we're going a lot lower or a lot higher yet. I said looks like we're gonna go higher, but it could be a lot lower, especially if I'm wrong. Remember how I always said if it's supposed to do something and it doesn't, it goes hard the other way, hard, not just slow, you know. So I just want to see what's going on. You can see the chat. Here, let me throw the SPX in there. Yeah, let's put this line right here, and you can see this little channel. Let's see which way we break, you know. Maybe a little lower. Yeah, maybe to there. Let's see which way we break. So, I mean, this could go sideways for a while, and if that's the case, the volatility would probably come in, right, and then compress. And then when it expands, it could either blow to the upside or the downside. You know, that will be a good trade, and which way it goes, that's the way you want to ride it. Oh, look at it. Look at the end of the day. What time is it? 2:48. Look what it's doing now. We're about to go positive. Looks like with 33 points. Look at the minute. Trying to do something here. Anyway, if you did the trades that I do, you wouldn't have to worry about this stuff. Go to sleep, go take a nap. But anyway, it's fun. It's fun trading. Yeah, so I'm gonna go ahead and end this video. I appreciate everybody watching. Follow me, follow some of the other videos I do, and we talk about the market. We talk about whatever you want to talk about. Whatever. All right, so thanks for watching. I'm gonna go ahead and end it here. Appreciate everybody. Thumbs up, man. Thumbs up this video. Share it and do all that stuff. All right, my name is Dre. This is Dre. And I'm out. I'll see you.